So it's time for the big three stocks, three charts, three trades. Rick Ducat will take us through the charts. And right here with me on set, Jason Brown, stock market expert at thebrownreport.com and author of 5-Year Millionaire. So it's great to see you. And he'll be with Warren Buffett on the weekend as well. So you're making the rounds here, Jason. I'm glad you're on. Before we get to your stocks that you're looking at, how about a market thought?
You know, I think the market is doing what most people should have planned for but didn't expect, which is we know that this tariff fight can't go on for long, and so stocks are oversold. We're starting to get a bounce, and I think the risk is not being in the market and that stocks are going higher versus the stocks are going to go lower. So I like where we're at right now. I think a lot of stuff is oversold and it's at a great discount.
And look, if you had pulled out, you would have missed the last 7 days, right? I mean, with the S&P 500 just running up just in those few days. So that being said, we'll get to your first name here, and you're looking at Whirlpool today. Tell me a little bit about this name.
So I'm looking at Whirlpool as the first stock, playing it to the downside. The reason is the stock has been trapped by the 10-day moving average. So you see every time it kind of gets up to the 10-day moving average, it gets smacked down. The stock double topped, I believe, in 2021, hit a double top, and then has been selling off ever since. And then when you think about it from a tariff standpoint and a consumer confidence standpoint, you're going to buy washers, dryers, high appliances when, number one, you're buying houses, which is not happening as much because of high interest rates. Then number two, if you fear you're going to get laid off or companies are pulling back, you're not going to be making those big purchases. So I don't see the stock moving higher. So I like this for a bear put spread. You could get in at the 80 strike price, call option, selling that, and then purchase the sell the 77.50, purchase the 80 strike price. You get about $1 credit. And for about 12 days, I think you can have almost a 40% return.
Yeah, I mean, the question is durable goods overall, as you noted. Are people going to spend on those big ticket items? You know, it's sort of like that, Rick, you know, the heavy thing when it falls on your foot and it hurts. That's durable goods, right? And it lasts at least 3 to 5 years.
I like how you put that.
So, Rick, tell me about the chart and what you're seeing.
I hope a washing machine doesn't fall on my foot, I guess. But we can see here that the chart has been trending downward. We had a bit of a rally to the upside. We topped out near 135.49, and then a gap down that gave us our downward sloping channel in which price has been traveling since that time here. We, even with our tariff-related news flow, we've mostly stayed within these boundaries here. We seem to have, for now, found a bottom near the 75 level. That's not to say that it couldn't go lower. That's just kind of where prices have been bottoming out for now here. So we have this floor to keep an eye on here. The ceiling could be this relative high point here, just below 82. We've also got our yellow 21-day EMA near 80.63. RSI still trending downward here, still sticking with this red trend line, so momentum still has a more bearish tilt. So if we were to add our other studies, standard deviation channels, and volume profile, we can see there has been a bit of volume activity down at these depressed levels, but really the heavier volume is much higher here. So this area here represents another node near 95. Then we have our point of control, the area of heaviest trading vol at 102.58. So those could be some potential consolidation areas to keep an eye on if price does start progressing to the upside. And to take a brief look at a longer term chart here for some potential support. Well, we're at the 5-year lows right now. If we were to move lower, our weekly -1 standard deviation channel quite far away at 49.23. Not really somewhere that probably the bulls would hope to go anytime soon here, but that's just what the study tells us at this time.
Yeah, I mean, I see the low yesterday, 73.72, and to your point, Jason, I also saw, and thank you for those charts, Rick, I saw JP Morgan with a neutral slashing the price target. They're down to 89. The stock's at 76 today and change. But RBC even went lower on this Whirlpool name. They went to $65 from 81 with an underperform. Do you want to give a final thought on Whirlpool?
Yeah, if you look at the last 3 quarters, they've lost $250 million over the last 3 quarters. $100 million 2 quarters ago, 97 million 1 quarter ago, and then the most recent about just a little under 50 million. And so the trend is not good from a revenue standpoint. And again, with the consumer confidence and the tariffs, I don't see that turning around anytime soon, at least not in the next 2 weeks.
Yeah, and I mean, we're still waiting for a lot of the details pertaining to tariffs. All right, next up, we're taking a look at CME Group. CME 1 year is up 36%. And just like the other one was at the lows, this one is at the highs. Jason, some of your thoughts on CME?
So what I like about CME is that the stock bottomed around 255 recently, and it's been pulled back to the 50-day moving average, had a double bottom, and then it bounced and went higher. So I like that it's thrown that W pattern. We call that the winner pattern. It's also coming out of a volatility squeeze, a Bollinger Band breakout to the upside. You mix that with the fact that they're into commodities, they're into Forex, they're into interest rate exchanges. So all of these instruments, people are trading and trying to hedge against tariffs, against volatility. And so it brings a lot of trades and a lot of activity to the market, which they make money off transaction fees, which that's not going to slow down anytime soon.
Right.
And so I think the stock goes higher.
All right. Let's see what you think here, Rick Ducat, about the chart.
Well, there's really not a whole lot negative I could say about this chart from a bullish perspective here. I mean, it's just been kind of a grind straight up here. We've got this longer term trend line giving us an area to look for potential low points here, but really price has mostly stuck to the 63-day exponential moving average in orange here as a supportive boundary. You know, many times during the past year, just several points here that we can see that it did find a foothold and then continue to rally. So that's how traders often use these moving averages: support during uptrends, resistance during downtrends here. We can see that price remains above our moving averages. They're continuing to diverge farther apart, which suggests the trend is not really slowing down yet either. For now, we're also holding above those old highs there near 273.42. Notice as well, still heavy volume here, even at these high levels, as we continue to push to the upside. RSI potentially even breaking this very modestly sloping downward trend line going across the highs. So a rather interesting setup here. We can also see that this is the heavy volume area, this period here near about 263 or so. So if price does retreat, if price tries to retest those old highs and fails, that's a pretty convenient support place to keep an eye on. It's this node is home to our 21-day EMA and our linear regression line, our line of best fit. So 262 to 265, that could be a supportive point to watch.
Okay, and I do see some upside potential. UBS has a 305 target. They maintain buy rating there. Morgan Stanley has a 304 target. JP Morgan, much different story. They have a 211, so they are on the other side of this trade. A final thought on this trade on CME.
So the trade I would look at is the August 15, 2025, 260 strike price for roughly $25. Your break even is going to be 285. I think the stock can get up to 295 and give you a potential 40% return on the exit, and then your break even is around 285. So you have about 90 days plus on that trade. I think we can get there.
All right. Last but not least, we're loading up Amazon, ready for Amazon after the bell today. Some of your thoughts on this name, we'll get to your trade as well. But the big picture?
Big picture, Amazon is off 25% from its highs, and I think people got a little bit afraid of the tariffs, but you got to think Amazon, like Walmart, has pricing power. They can pass the cost on to their distributors. Their distributors have some pricing power baked into how much they're paying to get the goods to put on there. They also have an interest in cloud and an advertising business that is doing really well. And let's not forget they have a subscription-based business. So we didn't all just stop paying our Amazon Prime membership over the last 120 days. And so I think the stock is oversold, and you want to own it down here at these levels.
Yeah, that's a great point, actually. I sort of forgot about that because that just kicks in automatically, right? We're all just paying that, I mean, when we're not looking. Rick, your thoughts?
A chart that reminds me of that old trading adage that the bull climbs the stairs, the bear jumps out the window. What I mean by that is it took us 2 quarters of growth to reach those highs. It took us less than 1 quarter to erase most of it here. So we can see now that we are approaching once again here this area near 192, this high point from back here, and then subsequent low points. So This is one of those sticky price levels that traders often look to as a place of importance here. Not necessarily saying it won't go through that area, just this is an interesting point where several things are aligning. Two of our moving averages are quite close to that line, so between about 192 to 196 could be a key area for the bullish crowd to overcome here. Notice as well that RSI has broken above its downward sloping trend line on the RSI, but momentum doesn't really behave as it normally does when you're right up into an earnings event here. Traders are often wary of putting on, lots of new positions when there's a known event risk situation coming up. So I wouldn't read too terribly much into RSI on a day like today as we are waiting for this quarterly report here. We can see, though, that price has pushed above our volume profile point of control. So this heavy trading area could be a supportive point if price does start to fall. So around 188, and then with our 21-day exponential moving average just a bit below that, our yellow line here, near about 185. If we were to move to the upside, another volume node here near 200, then our relative highs near 206.
Okay, and so today trading at 190, the high back in February was 242. Jason, your thoughts on the trade here?
So I don't usually like to take a trade over earnings, but this one you can do it safely. You can sell the 180 strike price covered put. You could bring in about $5 before the bell open. Now the stock's a little higher. Maybe you can only get $3. So the worst thing that can happen is if they meet or beat earnings, it goes up. You get to keep the $3 per 100 shares. If the stock drops, you own it at 180. Support is around 175 to 170. So you're kind of right there in the middle. And I think you wait for the stock to rebound and head back up to 220. What you can rest assured at night is that the company's not going to zero and it's not going out of business. So I like this one for the long term.
Yeah. And this is off the cuff. You don't have to answer it. I know that you've been following Berkshire Hathaway. Did you have a thought on what it is that you're going to be listening for this weekend or on the stock? And again, you definitely don't have to answer the question because it really is off the cuff.
I'm going to be looking for sentiment from other investors as well as from Warren Buffett and his team about how they feel about the long-term view. What I love about Mr. Buffett and his team is they're not short-term traders. And so if you can get past the short-term tariffs, the short-term volatility, if you look at 9/11, if you look at when COVID-19 happened, we haven't been down for more than 10 months before we rebounded and went higher. So 1 year is not even a long term. So I'd love to hear what they're saying about 5 to 10 years out.
All right. Jason Brown, great to meet you and have you here in person of the Brown Report. And you can get his book as well, and Rick Ducat on the charts there for the big three. And we looked at Whirlpool and CME and Amazon. Thank you both very much.